Chronicles. We're back with the They See God. Chris, how you doing today, man? It's a rough day?
Bro, very rough. Market is definitely not your friend today.
Yeah.
Jerome Powell definitely scared the shit out of everybody. And so at this point, there's a lot of people that were just dumping all sorts of stocks today. So I don't know, man. I mean, it was I woke up and I looked at the market and I went back to sleep. I was like, fuck
Did you?
this. Yeah. Like days like this, you don't wanna overthink things, you
Right.
don't want to overcommit to things. So I'd say it's not something that wasn't expected after those comments that he made, but just the breadth of the correction that we're seeing right now is something that's a little bit worrying, but over the long term, it's fine. Instead, I've just been taking this as an opportunity to just make sure that I can high class my portfolio and just any additional capital that I have coming in, I know exactly where it's going right now. So for me, most of my net income, like after paying taxes and everything else right now, it's pretty much going to Google. Like I'm not even trying to chance it with any other company. So just Google, Google, Google. That's it.
Well, at the moment, the only stock that I'm really like, I don't want to say selling out of because I feel bad saying this because I know a lot of people that follow me for like dividend investing are probably like angry that I am selling it, but it's Johnson and Johnson. So that one's staying relatively flat comparatively to the rest of the market. And so it kind of makes me happy because it's like, well, if all these other stocks are really retracing and pulling back and J&J is able to kind of stay flat, then here I am, able to kind of wait almost as if it's cash and then finally decide to sell that last 100 whatever shares. It's like a marginal, a little bit above 100 or whatever, but 100 something shares. There's like 17 grand basically, and then redeploy that elsewhere. So that's kind of like the hope that I'm kind of having is like you see these opportunities, but I'm honestly surprised that, to be very honest, the market has rallied as much as it had for the first 9 months of the year because I knew we weren't really out of the woods as of yet, and just keep like that continuous iteration from JP of being like 2% means 2%, 2% means 2%, 2% means 2% made me and I kind of felt this way last month after he kind of came out with his notes, where he was basically like, I don't care that we're dipping into the low threes, like 2% means 2%, kind of made me feel a little iffy as if like, oh shit. And then the continuous kind of movements for inflation to kind of go in the opposite direction of what we're used to for the past, say, 6 to 10 months made me start to feel like, oh shit, we might actually have a raise this quarter or a raise this particular month. And I was honestly surprised we didn't get that, but it's not off the table. And I think that that's what scares people a little bit, because I think at this point, people are looking towards cutting. They're like sitting there being like, I don't know how much longer this can last. And, you're starting to see sales year over year in terms of housing and mortgage applications drop drastically. But that doesn't mean prices for homes are going down, because I think a lot of that has to do with the amount of homes and supply and demand. But that's a different story for a different day. But, you're starting to see some things like people getting like whiny, I guess you could say, but nothing really breaking. And maybe you have a little bit more insight, because I know you've been doing a little bit more looking with respect to like the repo market and the used car sales and stuff like that. But other than that, I mean, I feel like things are still, even though interest rates are higher, I just hear a lot of complaining. I don't really hear actually any people truly being decimated by what's going on. And so I don't know, like to me, I don't know, maybe my kind of like internal feeling, or maybe I'm shielded from normal people finances or something like that. But I mean, it feels like money's gotten tighter for sure, but I don't know. It just doesn't seem like things are really to the point where, I don't know. Doesn't seem like
basically
right?
there's nothing broken, right? We're still seeing somewhat of a strong labor market, right? The prices on things of honestly, this is where we have to like take a step back from some of the commentary that the Fed had. And I appreciate how the Fed is going about this, where they're being conservative with their estimates. Like, the summary of economic projections is what really got people worried, because according to that, like, we're only going to see a very minor cut next year, and that, it's going to be a higher rate environment for a long period of time. And I think that is what is scaring a lot of people, especially away from sectors that may be a little bit more affected by higher interest rates. But the key to remember is, the last thing the Fed really wants to do right now is just come out and say mission accomplished, and then later on have to backtrack. And the thing is, if they say mission accomplished, it may create a lot of bullish sentiment that ends up, like, I mean, look at the sentiment right now. It's already really bullish. So in terms of like market sentiment corrections, that SEP report definitely did that. So I think right now it's going to all be about fundamentals. So you find companies that are fundamentally strong, who you let the earnings do the talking for them. So right
Mhm.
now you're seeing, and this is what I like about the market when it sells off. When you see quality get sold off, that's freaking amazing, because that means
Mhm.
that gives you buying opportunities, right? Whereas if you see just like shitty companies selling off, it's like, whatever, man, the shit deserved to be sold off. So right now, when I see general market drawdowns, I sort of celebrate a little bit on the inside, because I'm
Yeah,
like,
me
yeah,
too.
this is good. This is good. This gives me an opportunity to buy a really good company at a fairer price than what it is, what it was trading at literally 2 weeks ago. I do think that we get a Santa Claus rally. I think that the increase in CPI that we've seen right now is primarily driven by oil prices. And I think eventually the oil prices will correct a little bit once production starts to really ramp up in a lot of the sectors that we're talking about. And once that rolls in, and maybe even the Russians and the Saudis will, stop with their production cuts. If we get oil back down to, I would say, even 70s or 80s, like around there, that could be really good on a year over year basis. Because you remember, like, if you compare oil prices year over year, they're not that high, right? Because remember, last year was almost $100 around the same time. Let's just take a look at that real quick.
Yeah, I was about to pull it up.
Over
Uh,
year.
Last year.
Yeah.
So I'm like that graphic. Is that a good graphic?
Yeah. Like, let me share my screen real quick.
Yeah, I didn't like
So,
the graphics I had.
yeah.
Yeah,
Okay.
it's
Do you
better
see that?
graphic.
So here's the stupid blocker. Let me just give me 1 second. Pause on the site. Okay, there we go. And let's do 5 year. No, inflation adjusted. We're gonna take away the inflation adjusted. So you can see here right now, oil for us in September is trading at around $80-$90 for WTI. Last year in September, it was like 79. So it's like about 10% higher than what it
Mhm.
was year over year, right? So the question here is now, like, November it was down to 80s, and then January was down to 78. That's what we need. We need prices to come down a little bit, and hopefully
Yeah,
more production will help with that, because then that means that year over year it's a flattening number. What we saw that really helped out our CPI numbers was this precipitous drop from almost, like, last May of 2022, almost $114 a barrel, to
right,
down to like 67. This definitely helped tremendously with controlling inflation, right?
right.
But now we're seeing the reversal of that, and hopefully it doesn't keep going in that direction, and instead we see a flattening of the demand picture, and so
But
we
I think
see.
even better was kind of like Dutch TTF for, say, global, or even Henry Hub prices
Yeah,
for the United States as well. Dutch Bros. But yeah, like if you look at it, it's exaggerated in, say, Dutch TTF, but actually it's, is that logarithmic? What is that? Is that more than?
hold on one second. No,
Oh,
this is
okay.
the
That was
futures.
like
Yeah,
a, got me
yeah,
scared. But yeah, like if you looked at that comparatively, that's what you're kind of coming down from for like Europe and stuff like that. So when you're
yeah,
seeing their inflation rates really drop off like a cliff, that's what they're building
yeah.
off of, is that massive amount of, things were trading about $200 dollars per scuff, like per
Wasn't
thousand
that
feet.
nuts? Look
Yeah.
at that. Wasn't that nuts last year during the first, like, during the invasion, like when
Yeah.
Russia first invaded? it almost got to almost what was it, $300 spot
Yeah.
prices for natural gas. I mean, now it's trading in the same range like around COVID, which is like the 38s and 40s, because a lot of natural gas started to get imported from like Qatar and from the US actually. So
Yeah.
I
Yeah.
wonder if the liquefaction trains really helped out, you know. So
I think so to an extent, but the thing that I've yet to really see is if you were to play the same sort of graphic for U.S. natural gas, which I have it here, so don't feel obligated. I have it. Can I blow this up? Shit, maybe I can't. Uh, Henry Hub price.
So what we just saw was the
Uh,
natural gas prices, but that was for the Dutch one. So if you go to Europe, that's the natural gas prices over there. So the three main centers for natural gas pricing is for us in the US is Henry Hub. For the Europeans, it's the Dutch, what do you call it? Dutch market one, and then for the other major one is Japan. Japan is another major what do you call it, importer of natural gas. So typically you see
Yeah,
that.
they import a lot, and so when you're talking about the big characters that you kind of are looking for in terms of creating a margin off of this kind of prices, this is kind of what we're looking at. So if you remember, you know, they were paying upwards of $200 per million scuff or 1,000 square feet of gas. Sorry, we were paying 9, $10. So you're getting
Yeah,
all that margin, right? So you're basically
yeah,
being able to take it from the United States, ship it. Of course, there's going to be costs associated with it, but the amount of money, and this is why a lot of these companies that had a huge LNG portfolio were literally printing money last year, like
yep.
Shell and all those guys. And so the fact that you still have it at $30, this is kind of the talk that I'm talking about with respect to having a good company that which has a really good LNG portfolio. You're able to get it for $2.72 here in the United States and liquefy it and send it over to Japan where the TTF is that we were just looking at, or the Japanese marker, which I don't really have. Japanese LNG price. I'm curious what it is now. JLNG, and it's at like $12 right now.
It's not
Let me
bad.
let me
It's not
share
bad.
let me share that one instead. So you think about it. I mean, if you're able to kind of get all that margin, then you're just literally calling your own shots at that point. I mean, you're
Yeah.
selling it at $2-3, or buying it at $2-3, and being able to push it overseas at $13 or 33 euros. I mean,
Hmm.
what's not to love with respect to that? But um,
Yep.
so anyway, I don't know why we're dragging on that, but you saw that large drawdown, right? That's kind of what I wanted to get to. I just got off on a tangent, but you're seeing that large drawdown from $200 in TTF to now being $30. Like that's a huge, you know,
Reduction.
yeah, huge tailwind for inflation in Europe. And even still in the United States, when it was $9-10 a year ago, now it's trading at 66% less, below $3. That's a huge
Yeah.
tailwind for us. And so you've seen it
Yeah.
flatline. Is it going to go back up? I think it will. 2024, there's going to be a lot of LNG trains coming online.
Hmm.
And the United States still has to use the gas, right? I mean, the reason
Yep.
why gas is so cheap here is because we have so much natural gas in the United States because we've basically got all this shale gas that we've been able to unlock by drilling sideways and hydraulically fracturing, which TJ was talking about on Tuesday. And, we've been able to unlock it before. A lot of these LNG terminals that we send gas to Europe and to Japan, they were all supposed to, and Chris has talked about this before on the podcast, they were all supposed to be import facilities from Russia and Trinidad and all these other places because we didn't have enough gas. Like our portfolio for conventional gas is very low. But we have a lot of shale gas. And so once we were able to unlock all the shale gas, um, have you seen all the Stanley memes on like Instagram and stuff?
No.
No?
What's the Stanley meme? No.
Is that a Stanley Cup?
Yeah, it is. It
Yeah.
is.
So
My wife got it.
they talk about all these girls that love their Stanley Cup and they're like 40 ounces or whatever, and these like small
Mhm.
little women carrying these massive cups around, just like banging them all over the place, like walking, and it's like there's people with like that have their babies carrying them around, and they're just running into stuff. And it's like you see all these chicks that are literally just like they just have to have their Stanley. They're just walking around, and it's true. Every woman that I know at work right now at UDoc, they carry
Yeah.
around their Stanley cups and they're like swirling them around. And,
Yeah. Yeah.
but their hands are so small, like it's this massive ass cup. But anyway,
Yeah. Look at the size of this thing, man. But it's
it's
good if you want to drink water and stuff. It's like the perfect size. It's like, I drink a
it's
lot of
husky.
water now because of it. It's healthy.
It's husky. Yeah, it's husky.
Yeah. Yeah, just if you this is the thing that I was sharing real quick.
Yeah.
I don't want to interrupt you.
No,
So you can see here utility prices like last year compared to now, utility
Mm.
prices have come down significantly. This is one of the reasons why companies like Enphase actually probably took a hit because Enphase is directly tied to the electricity prices. And so I'm not sure what the electricity prices are right now for a lot of people, but in terms of like year over year inflation, it's flatlined, so this is good. Like a lot of the things that were leading inflation higher for us last year, they're much, much lower this year. So with the exception of freaking housing, housing right now is actually like trending downwards as well, if you take a look at it. But it's just it's the actual like physical properties themselves that are still up 3.34%. But the rental prices are all the way like look at this. They're even trending into negative direction. So I think a lot of the stuff that was brought by the Fed was to basically just push the markets in a be more cautious environment rather than actual projections, right? I think that they were just being very cautiously optimistic, and the market right now is just overinterpreting it. And I think by the end of this year, we're going to start to see even more disinflationary tailwinds pick up. And if that happens, the Fed will do what the Fed does. They'll revise their guidance and say, you know what, maybe we were wrong. Maybe the new projections are, on the other direction. Did you see this interview on CNBC today with a professor from Duke that basically started the whole? One second, let me just pull it up real quick.
I am
I think,
excited though. I have a lot
yeah,
of like mental plans. So I told you
mhm,
about the house that I'm buying, but
yeah,
I have a lot of plans for my little office. I plan on having like a separate bedroom, guest
yeah.
room / office.
Okay,
And I'm excited. I'm gonna get like hang a TV, but also have like a little spot. Like I plan on getting a new desk, a new camera. Anyway, I'm just like really thinking about it. I'm like, I don't know. Like I feel like now is an opportunity to spend a
dude.
couple hundred
Walk-in
bucks.
closet. Walk-in closet. Okay.
Oh yeah, I needed it. I love it.
Take, dude, what I'm in right now is a walk-in closet. Okay, it's a
Oh really?
walk-in closet. Yeah, a walk-in closet that I converted into like a little home office kind of thing. And it's perfect because I've got L-shaped desk that fits perfectly. I did some electrical work, so I have like some lighting here.
Yeah.
But in terms of sound, it's awesome. It's snug, but it's good for me. Like,
Yeah.
trust me, if you do get like a nice walk-in closet, it's perfect to set up for a stream.
I'm like envisioning it. I think my walk-in
Yeah.
closet is not small. I think if I wanted to, but I feel like if I have a guest bedroom, I mean, because
Yeah.
your condo is what, a 2 bedroom,
Three. Three
3
bedroom.
bedroom? Okay, so why I'm
Yeah.
curious, why wouldn't you put it in one of your guest bedrooms?
Well, the thing is, like, the way that sound works is that the
Yeah, yeah,
more what you're gonna have is like the closer the space is, and like I have like sound dampening like things as well, like around
okay,
me. But basically, when you're in a big room and there's like a lot of surfaces, so when you talk, there's a lot of echoing, right? And you get a
right.
lot of something called reverb. With like a small office like this, there's literally no reverb. I have a carpet down here, so the carpet is like nice, and all I have to do is just like close the door, and I'm in like a recording studio. So if you ever seen like a recording studio, that's
Yeah,
like
yeah,
the
yeah.
audio sounds really nice and crisp, you know?
Huh,
And yeah, just I'll show you one time like
yeah, yeah, yeah.
off the stream, but it's a
The
nice little
walk-in
setup.
closet I got's 4 foot 8 inch by 13 feet. So like, and I'm
Mhm.
looking at it, I'm like, yeah, I'm literally just looking at it, like the door's on the one side, so it's like if you
Mhm.
turn, you could have, just like what you're saying, cut it in half, still have that
Yeah.
4 almost 5 foot by 6 foot for your closet, and then the other
Yeah.
half you could have as a little office.
I took the entire thing. I was just like, no, my wife has her own walk-in closet, so
Right.
like that's where all our clothes are. But then this one is attached to my guest bedroom, and this one is like sizable. So I remember when I told my wife first, like, oh, I think I'm gonna turn the closet into like a studio room, and she was like, oh, that's I don't know, man. That sounds the room looks kind of small, but I made sure I did all the measurements, and I have, like I said, it's a nice little setup.
And did you just
And
get? I'm just curious. Did you get all your shit
yeah.
off of Amazon, or what did you
Pretty
do?
much. Well,
Yeah.
pretty much mostly Amazon. And like I said, I just measured everything out. And so once
Okay.
you do that, you can find stuff. And then
Yeah.
like I just have one light here for like a key light, and then I have another one attached to the desk, like pointing this way. And then I
Yeah.
have like a hair light coming down, right?
Okay.
And so this way I have like a 3-point lighting system. So it
Yeah, it's
looks
pretty good.
good,
My
looks
lighting
good.
could be a lot better, but I wanted to say, like, when I was moving back to the States 3 years ago, it's literally like almost 3 years to the day. I was like in a country where you couldn't just order off Amazon, right? Like
Hmm.
everything comes from the US, but you still have to go to the store or get it specially ordered, and it costs a shit ton. So like when I came
Yeah.
back, I still was like, I guess, in this mode of uh go to the store and buy whatever you want. So I was going to get a desk, I was going to get like all this like stuff in person, and now I'm sitting here like, why would I ever have done that? Like 3 years later, after having experienced, getting your food delivered by Amazon, getting all this shit delivered by Amazon, I'm sitting here
Mhm.
like, why would I ever do that? Like, what was the point of me? And I'm like recognizing now how much more additional stuff that I could have bought for so much cheaper. Like this desk that I bought was
Mhm.
like 100 something bucks, $120. And
Mhm.
it's like, I don't know. It's garbage. Like, I don't know. I
Mhm.
just think about what I could have been able to do.
Mhm.
But anyway, different story for a different day. Let's hop into
Yeah. Okay. So let's do this.
To talk rates and the latest Fed decision is Campbell Harvey. He is a professor of finance at Duke University. He also coined the inverted yield curve indicator in a 1986 thesis. And Professor, thanks for being here today. Let's talk a little bit about the inverted yield curve, because it's gotten a lot of pressure from people saying, hey, it's wrong. It's been indicating recession for a long time. You think they're misreading that indicator. What's it telling you right now? What do you see?
So the indicator is 8 out of 8 in predicting recessions, and it doesn't have any false signals. So one thing is the lead time from the inversion to the beginning of a recession. And if we look at the last 4 recessions, the average lead time is 13 months. So it's way too early to say this is a false signal. Maybe it does turn out to be a false signal, but you can't say it's a false signal when you're not even at the average. So at the average, we would expect a downturn to start in December or January.
December of this year or January of next year?
Correct.
Because it takes 12 to 13 months before it's going to kick in anyway, and that's about
exactly.
where we're hitting
and
at this point.
People also say, well, we've seen the yield curve inversion become less of an inversion, so kind of a re-steepening. Well, the last 4 recessions, that happened before the recession. So it doesn't mean that it's a false signal necessarily.
You think a recession is coming?
Yes. So I think that the Fed has made a major mistake. What they should have done yesterday is not just pause, but say, this is it. And indeed, it would have been ideal for them to say, well, this is it. And now the next decision is to decrease the rates, not to increase the rates. And unfortunately, there's a false narrative going on by the Fed that inflation is well above its comfort level. And it doesn't make any sense to me. And let me tell you why. The most important component, the biggest share in terms of contributor to the CPI, which is running at 3.7%, is shelter. And shelter in the calculation is running at 7.3%. And that is far away from the sort of shelter inflation in the real world in real time, where housing prices are flat or negative. Rental costs, if you look at various surveys, those are flat or negative. So if you replace that 7.3% in the CPI with a more realistic number, like 1%, which is what we observed today, 0 or 1, then the inflation is not 3.7%, it is 1.5%. And if you believe shelter inflation may be a little higher, like 2%, then the inflation rate is not 3.7%, it's 1.8%. The point I'm making is this quote unquote long way to go that we hear from the chairman, that doesn't make any sense. And I'm not talking about a special inflation gauge where you trim certain things or you throw food and energy. I'm looking at the basic inflation calculation, but replacing one very stale component with real-time, realistic numbers, and we're below 2 right now.
So you think inflation is not nearly as bad as the metrics that the Fed is watching. You think an economic recession is much closer than other numbers might suggest, or numbers that the Fed might be watching. You're a respected professor, Harvey. You're a very respected professor, Harvey. Why don't you think there's more of a traction with that picking up? Why don't you think that message is getting related more often?
People want to believe that we can avoid a recession. I actually hope we can avoid a recession. Like, nobody wants a recession. But if you look at the fundamentals in the economy, so 2023 looks pretty good for GDP growth. But if you look into the numbers, it's driven by the consumer. The consumer bailed us out in 2023, and that's a result of a lot of savings that were built up during COVID and some government help. But those savings have been driven down and are likely to go close to zero by the end of the fourth quarter. So consumption is not going to bail us out in 2024. The other important component, investment, well, that's already negative. So in 2023, investment spending, the growth rate is negative. It's almost like we're in an investment recession already. So you put those two things together for 2024, and it spells very low or negative growth. Hopefully, a soft landing.
How deep of a recession? Yeah, how deep of a recession
so
do
that's
you
the thing.
think one is coming?
The question is how deep? And every time that the Fed increases rates, it increases the probability of a hard landing. And we all want to avoid the hard landing. And it is possible to do that. And I wish that they would look at the data to understand the actual CPI and realize that in the future, that 7.3% is rapidly going to come down to something like 2%, and inflation will be within their range. But instead, they've got this one lever, and that's increased rates, and it increases the probability of a scenario that nobody wants. I do think that if we do pause and maybe start to decrease, we can avoid the worst possible case.
I just love how they kept like slowly increasing the music at the end. They're just like, but I want to take a step back. I know you have some thoughts, but and I want to hear your debrief. But I want to give people a picture as to what Harvey was talking about, Professor Harvey, and I think he explained it very eloquently. But what this is on the screen is this is obviously provided by the Fed as well, but it's the 10-year Treasury yield minus the 2-year Treasury yield. So why is this important? So if the 2-year Treasury yield exceeds the 10-year, that basically means in the short term, things are looking riskier than probably 10 years out in time, right? So that means it's probably looking like an imminent sort of recession. So what is this kind of saying? It's like, well, things get kind of tough. I think that this is, let me pull it up on my screen so it's a little bit bigger. But I think that this is in the 90s. You remember the recessionary period of the 90s. Then you had the 2000s that went inverted. And then same thing with 2008. And now we had one kind of very close to, some people are saying that it doesn't really count, but basically got to that point in 2020 when the repo market started getting really bad as well. And then you had the pandemic as well. And this is a really deep one, obviously, because we raised interest rates so abruptly. In the short term, that I think it's being heavily influenced by that. But I want to give people an idea as to like what they're kind of referring to when he's talking about the last 7 or 8 sort of dips below zero. meaning that the 2-year treasury exceeded the yields of the 10-year treasury. Just to give people a little bit of background. Now, Chris, I cut you off before you started reflecting on what Dr. Campbell Harvey said.
Yeah, it's just interesting to see because I'm in agreement. I think all the ingredients for a very deflationary scenario are already upon us. The only thing is there's no singular trigger that's being pulled right now to make that happen, right? So you're not seeing that like crisis that usually comes around. It's usually a crisis that puts you into the recession. So as an example, if you go back to like 2000, like let's say 2020, you had COVID, that was the crisis. 2008, the crisis was around the housing bubble, and the subprime crisis. So I don't necessarily see this subprime crisis issue right now. So the question is, what's going to actually happen? And the scenario here is that we're likely to see a lot of the effects of all this rate tightening start to come up now. And I think I agree with Professor Harvey in saying, look, just give yourselves a little bit of a break. Don't go too crazy with the narrative that we're going to be in this position for longer and drive things down. Because I think you've got student loans that are about to start getting resumed, right? You've got pretty much a consumer who's tapped out. And the economy right now, most companies are not really hiring all that much. If anything, they're actually just scaling back on hiring. So I think right now we're at a point where the Fed needs to just be calm, not spook the markets like they have with a lot of their rhetoric. But I do understand where they're coming from. They're just trying to make sure that there's no reacceleration in rates, and the way that inflation, and the way they're doing that is by just pointing to a grimmer picture next year, which may end up serving as the quarter basis point raise without actually having to raise. Because you know what I mean? Like sometimes just based on the commentary, you can get the job done without actually having to physically do the mechanics of it. So I think that's what they're going for. And if we see a weak Q3 and Q4, then that just leads right into a stronger 2024. I think 2024 is going to be a good year. It's just maybe the first half won't be as good, I think we do see a Santa Claus rally followed by some CPI headwind numbers that, that just create like a moment of uncertainty. And so we're going to see like a very mild recession, if even we see a recession. And then we just rally into 2024 and 2025.
So you have the mind that we didn't really have a recession in 2022, 2023?
No. I think we had a recession. I think we had, but it wasn't like a really bad recession. I think it was one of those things that was just so soft that we never really noticed it. But dude, everything was down like crazy. We didn't have the traditional like 2-quarter growth rate slipping year over year. Like the traditional way that they identify the recession, I don't think they hit those. I mean, I think they hit those, but then there was some like things that they changed around with how they mark recession. Also, if you remember that,
they moved the goalpost for sure. I mean, they were like, yeah, that we technically had negative GDP growth 2 quarters in a row, and it's like, well, but I think where they're kind of coming from is maybe what they were looking like is, of course, when you're coming off the back end of a massive, kind of impact of say a pandemic, to kind of retrace a little bit, just like we saw the revenues for Google retrace and the revenues for Amazon retrace a little bit. Or sorry, I shouldn't say revenues. I just say the earnings retraced, right? Yeah. Where the fact that everything was expanding so quickly, people were just trying to adjust by things opening up, or just, everything was going which way. Supply chain was all messed up. Maybe they just wanted to call it kind of like a fluke, because in reality, like, if you didn't really have something like the pandemic, things would have probably been a little bit more normal. I don't really know. But to me, it felt a little bit during that time, like about a year ago, when the recession was, it felt bad. Like it felt like with 2022, prior to this kind of bull run that we started to in kind of January 23, like I was driving to work and I'd be like, am I scared right now? Like financially, like I've never really felt like that during the pandemic. it was all funny money, right? Like the market went down 25-30% within a month, and then it retraced, almost 50% and went up, the rest of 2021. So it all felt like fake money because the M2 money supply that was being injected into the economy. So 2022 felt very real in terms of recession. So I thought it was always kind of a joke when they said, "Oh, it's not a real recession," and so to me, it's like, is it going to feel like that again? Because other than the pandemic and maybe late 2018, I've never really been hit with like a recessionary sort of fear. I remember looking at 2018, the markets went down like 20-25% pretty abruptly in the late 2018 timeframe. And I was buying the hand over fist, but I don't know. Like I don't know. I'm curious to see, do we actually have a large retracement, 15-20% correction before? Because I feel like we've already kind of experienced this. We're in this weird lull period, and I don't know if it was you said it or somebody else said it, because it's like we're at the peak of, or close to the peak of, where at least short-term interest rates are going to be maybe another quarter point or half a point, but the majority of the work has kind of been done. So it's like you're kind of sitting at the top of this roller coaster ride, waiting for it to kind of turn the other way, and it's not going to go back down to a point, like a point or a point and a half, right? I think that they're going to cut it very slowly, a quarter point here, a half a point here, unless there's some sort of drastic need to kind of unleash it at half a point or 1 point intervals. But I don't, for right now, I don't see that. So it would be weird to kind of experience this big pullback when everything seems to be growing very quickly. But it goes back to what you're saying. A lot of these things have lag effects. And, you're really starting to see that in the mortgage application rates and things of the like. Rental prices kind of coming back to normal as well. So I don't know. I don't know what when you say disinflation, do you mean things actually going back to where they were pre-pandemic? Like cost?
It's just things are not going up as much anymore. Like, so, you have deflation, disinflation, and inflation. So you have deflation, which is negative, right? So that means that what cost $100 last year costs $90 today. That's deflation. You have disinflation, what's cost $100 last year costs $100 this year. So there's really not much inflation going on. And then you have inflation, which is $100 cost last year. Now it costs $110. And so what we want to go from is inflation to disinflation, right? So instead of that 110, we want it to be closer to like 102. That would be ideal for us. We don't want to go into like the $90 either. Like if we go into deflation, that's bad too, because that means that we're definitely going to go into a recession. So, it's just one of those things that right now is just a time to be patient, find some good companies that can weather the storm. And it's so funny how projections happen and they never turn out the way that they are. You remember earlier in the year, everyone was like, man, they're probably going to cut at the back half of this year. Like, at the end of 2024, like 2023, they're going to start the cuts. And now we're like, man, they're probably going to raise one more time in 2023. This stuff never happens in the time frame that we're expecting. And I don't think even the cuts will happen until probably like maybe Q2 of 2024, unless we start to see massive amounts of deflationary tailwinds. But I'm telling you, man, the Saudis and the Russians really fucked us, dude. If oil had come down, I think the prices of things like would still be down. And then the Fed could have at least said, you know what, we don't see the need for further rate hikes. But this last 2 months of oil prices starting to climb up again really messed us, dude. Messed up a lot of projections. But that's how things are, right? Like, you can never tell what's going to happen. Like, who would have guessed that the Russians invading Ukraine? Like, that was not on my bingo card, but it happened. And so the entire world got thrown into a tizzy with energy prices because that happened. That was a major geopolitical event that happened last year. So
yeah. And it really destabilized a lot of stuff. I mean, it's really putting geopolitical odds into, the relationships with India and China. I mean, they were already kind of at odds, but it's really starting to form like a deglobalization of stuff where, since 1990, when the wall fell down, everyone is kind of just trying to unite across the world. And, there hasn't really been any true major conflicts. There's been proxy wars with like Syria and Libya and stuff like that, where, the US is funding one side and the Russians are funding another, right? So there's been that, right? And we've been involved in that for God knows how long. I mean, even Afghanistan and stuff like that. I mean, that's been going on for decades. But the major stage of it being like a first world sort of country, like Eastern Europe, right? Instead of something in the Middle East or, more of like an Asian sort of country. It's actually more of like on the main stage of, oh crap, this is next to NATO's backyard, and that's where it starts to get a little bit homey for people. Like, oh crap, like I know a bunch of people from Ukraine, and we know that they wanted to join NATO or have talked about it, and now they're being invaded. Like, are we going to invade, Russia because of this? That sort of fear of kind of bringing back a Cold War-esque sort of feel to the world again, to kind of demonstrate. I mean, nobody ever thought that like Russia was the United States' best friend, but nobody really thought a world war was going to break out overnight. So it's just interesting to kind of see that, a small thing like that can really, but at the same time, I don't know. It's interesting. I agree with you 100%, though. I think when I originally was forecasting it, people were like, rates are going to increase soon. And I was doing a live stream on a different kind of time. I think I was doing once every week on a Friday or something like that. And people asked me about it. I was like, I don't know. I think like by the end of 2023, we'll probably be at like 2.5%. We might have raised it 4 or 5 times. I don't think it'll be that bad. Here we are, literally twice that, if not more. And my face got ripped off. But if you think about it, like if you look at the previous times we've raised interest rates, and it's never, maybe other than one time, been as aggressive as it has been this time. And so to me, you can only look at like the previous data and really kind of try to understand where you fit in there. And to me, I was like, yeah, 2.5, like going from 0 to 2.5 in a couple of years, like that's a lot, right? So lo and behold, here we are within a year and a half, up 5%, potentially going up to 5.5. So I don't know.
What's really interesting? The labor force participation rate, it's actually starting to come back to normal again. We had a lot of artificial stimulus, and because of that artificial stimulus, not a lot of people. Well, I wouldn't say not a lot of people, but there's plenty of people that weren't exactly in the labor force. Hold on, let me just show you real quick. Here we go. And so this might actually be helping wage pressures a little bit, because so this is what we had a pretty steady wage number of total working adults working at the time. So you had literally like a lot of people working right before COVID hit. So you had about 63.25% of the labor force participation. And then post COVID, everyone started getting laid off. And then of course there was the bout of rehiring. And then we went into a tight labor market. So you can see here all the way from 2001 all the way to now, it still hasn't recovered back to the mean again. And now this is the first time where it's back to normal. So you can see the labor force participation is like only 100 basis points away from 2019 levels. And I think that will also help, because the more people that are in the job market will actually drive wages down, on a whole level. I'm not sure that it'll like do it in any particular sector, but there's going to be a lot more people looking for jobs right now. A lot more people willing to work, especially with all the subsidies and everything that's being cut away. And now with student loans restarting, that'll be another big boost as well.
So I'm kind of curious, maybe you can educate me a little bit. I mean, I pulled up the same one, but it was so far out, and then you pulled up another one that was a little bit closed in. But now I want to talk about why. I know this scale goes from 58% to 68, right? So this is only 10%, but so I don't want people to think like it went to zero and now it's coming back, right? It's went from 66%, tailed off during this time period. And I don't know if this is due to quantitative easing or
no, baby boomers, man. A lot more people are aging. So there's a couple of things that are happening. Number one, as a total population, we're getting older. The older population feeds in, and like because of advanced medical sciences, we're not too many people are dying, right? So you're seeing that there's a lot of older boomers retiring. So when they retire, that ends up basically putting more pressure on the labor force participation in terms of like total amount, right? Because now there's going to be a lot more retired people than there are working age people. So that's what's the main reason why you're seeing that it went from 68% down to what we have right now. So if you look at the average, if you look at like average working age, that should also help you understand like average working age population.
So here's like men that are 20 years or older, went from 75%, 76% down to 70. Here's women, a lot less women. So 60%, 15%, I guess, of women.
I don't know. Maybe OnlyFans for that one.
Yeah, I don't know if
I don't know if that counts as a job, but
16 to 19-year-olds. A lot of these kids are still in school, right? So maybe like 1 in 3, or either they skip college or they're.
Man, I don't know what's going on with that. I had a job when I was a kid.
Like 14, man. I couldn't wait.
What was your first job?
It was actually kind of sad. Not really, actually. I don't know why I said it was sad, but it was a dog kennel. So I worked at a vet hospital. So they had a veterinary practice, and they had a kennel where either dogs were waiting to get medicated or get treatment, or people went on vacation and they just needed somewhere to store their dogs. And so we would take them out, clean up their poop, clean out their cages, feed them, play with them a little bit. So I did that from I was like 14 till 18, 19. And then I thought I wanted to become a physical therapist. So when I went to college, and like maybe not physical therapy per se, but work with like a football team or something like that, be like a trainer on the field or something like that, and then travel with the team a little bit in case anybody got injured. So then I switched to kind of working in physical rehab hospitals. My mom got me that job because she was a nurse in a rehab hospital, physical rehab hospital. And so mostly like orthopedics and stuff like that. And then I found out that I didn't want to do that. And I did petroleum engineering instead. And it was probably the best decision I've ever made. Because the first class I ever took, I don't know if I ever told you this, first class I ever took for petroleum engineering, I was like, wait a second. Like, oil comes from rocks? Like, it doesn't come from like underground caverns, right? Like, I just thought like you had these big ass underground caverns. And what I thought like a completion engineer was like, they went into the caverns and made sure they built a bunch of columns so that the caverns wouldn't collapse when you take out all the oil.
Yeah.
Like, I didn't realize that like sandstones, like the stuff that's in beach, like if you pour water in beach sand, it disappears in, like, that's basically the same concept as oil. Like, oil disappears into the pores, space between all the sand grains. And that's what you do. You basically just put a sand filter in the ground to make sure your sand doesn't come into your wellbore, and you decrease the pressure up top. You have the reservoir pressure built up. All these fluids are building up in this little pocket of sandstone, and you try to relieve the pressure by sucking on it up top, like and relieving the pressure. That's all it really is. And fluids go from high pressure to low pressure. We all know that. Osmosis, right? That's sort of like concept of you go from high concentration to low concentration. And
honestly, that's
and I was like,
you're not
crazy.
You're not the only one. I thought there was, like, when they say, oh, there's a giant lake of oil. So I'm thinking the same, like, all these drilling guys do is just take a giant straw and put it into the ground and then just suck all the oil out. That's what I thought. I think that's what most people think. So.
Dude, I thought that, and I thought that pretty much until I went into petroleum engineering classes, and then I was just like, oh shit, and realized I had to study like what rocks are and geology, and I'm like, I'm not prepared for any of this. I thought I was just going to be putting straws in the ground. Like, what the hell? Like, I'm actually going to have to realize, like, and recognize how permeable a rock is. Like, nothing flows through rocks. Like, what the hell are we even talking about? So to kind of to go down that path, it really kind of opened my eyes. And I was sitting there the whole first year, like, this is fucking cool. So I stumbled into, literally by chance, something that I absolutely love. So
nice. I lost count of how many. So my first job, if you could call it a job, was I used to do people's homework for money. Like I didn't get a lot of money from my parents for like to do stuff. So like, I don't know how it happened, but my best customer's name was Kevin. He was like a Chinese kid who was in special ed. But he wasn't in special ed, but he got like extra, I don't know what they call it, but basically, he got special assistance. And the thing is though, but Kevin was rich, and Kevin would, be like, man, I wish I could write papers like you. I was like, oh, why don't I write one for you? Like help you write it. And then I ended up just doing the whole thing. And he just like, hey, what if I just gave you like $10? Why don't you just do this all the time for me? And so every time that there needed to be, so I was the original Chat GPT. So I used to do this kid's homework for money, and then someone figured it out. And so then another guy said, hey, Crystal, do your homework for money. So I used to do 2 people's homework and then 3 people. And then, it wasn't a lot of money, but it was a good little side hustle that paid for like my first PS2.
Yes.
Then I had a job. So during the summers, I used to go to my uncle's gas station. So I used to work there. And then he had a liquor store. So I ended up working at the liquor store as well. Like, it's funny. Yeah, like a true Patel, right? So I was 18 working at the liquor store. And then I got a job at New York Public Library during the summers as a page. So like back in the day, like New York Public Library in Manhattan, like on 42nd and near Bryant Park. It's not a lending library. Like you go there, you just, you have to use the book. And it was actually featured in John Wick. So if you saw the movie John Wick, that was actually the scene like of the history and genealogy department where I was working. And basically, they would tell you like, hey, we want this book. And you would go to the back and you would go get the book for them. And so that was another job. I worked at Blimpies for like 4 days after school. And the reason why I quit that job, I remember and it's funny because Kevin is the one that hooked me up with the job.
Fucking Kev.
And so what happened was the guy who owned it was just a really fucking cheap dude, man. He was a cheapskate. And sometimes like the customers would ask for like a little bit extra. And so, like they'd be like, oh, can I get like one more slice of cheese? So it's one time I just put like an extra slice of cheese, and this dude like chewed me out. He's like, cheese doesn't grow on trees. I don't know what you're doing. I was like, yeah, I know cheese doesn't grow on trees. It comes from cows, and he's like, you're like an ungrateful little, shit. And I was just like, so you know what I did? I said, okay, no problem. And I made myself a meatball parm sandwich. I just bounced out of there. I was like, fuck this. It's like, you're not getting paid for this week. I'm like, yo, keep your fucking pay. I don't give a shit. And then Kevin called. He's like, yo, what happened? The manager called me. Like, it sounded like you just left in a hurry. It's like, I didn't know that you wanted to do my homework that badly. And I was like, bro, I'm not trying to do your homework. Like, I'm desperate for money. That's why I'm helping you, Kev. So it's just a very, weird
I've
time.
only quit one job. I mean, I've left other ones, but like it was because I was moving on to other jobs or something like that. But I've only quit one, and it was being a food runner in college. So one of the guys that I worked with, his uncle opened up a restaurant at Penn State, and I went to be a food runner. And the manager just like rubbed me the wrong way, man. Like he just, it was a big deal for him. Maybe I was being a dick because it wasn't a big deal to me. Like it was a part-time job just to get like a couple bucks a week so I could buy beer. Like it wasn't a big thing. And so he piped up to me one day, and I was just like, yeah, I quit. And so he's just like, okay. He's like, okay, so 2 weeks from now, like, and I went in for the mission. Like, I was like, I'm quitting today. Like, I'm straight up. I was like, I'm finishing this shift, and I'm not coming back. But I'm going there to tell him that I quit. And he's like, okay, so 2 weeks. And I was just like, no, like, I don't think you understand. Like, I quit. So after telling him I quit 3 times in a row and that I wasn't going to work 2 weeks, he still kept going like, okay, so you have to have like a 2-week transition. I was like, sure, man. Sure. whatever you say.
Yeah.
After telling him straight up, and he kept calling. Like the next day I was supposed to show up, kept calling me. That Sunday kept calling me. Like I tell people straight up, like I do this at work too today. Like I'm just like, I'm not doing X, Y, or Z. It doesn't make any sense. And they'll just be like, okay, sure. And I'm like, you know, like, okay, sure, as in, and they'll like wonder why I'm not doing it. And I'm like, I told you why, but they just like try to, I don't know, guilt me into doing stuff sometimes. I'm just like no. Like I think it's pretty funny.
Yeah.
But going back to what you were talking about, crap, I lost my train of thought. Oh, tutoring. That was one of the most profitable things. I think that there was a guy at Penn State who did this where he did some sort of engineering or mathematics or something like that. And he opened up just like a commercial space. And the only thing in that commercial space was a bunch of desks and tables. And so he hired a few students to help him, but he basically would gather previous tests from previous years, from previous professors. And you know, when you were in college, man, like the shit that they would like try to explain, and you had to memorize the theorems and like why. And it's like, I don't give a shit about the theorem. Like, explain this to me rudimentarily. Like, I don't need to hear all this fancy talk, right? Just talk to me like I'm a damn human being. And so that's what this guy would do. He's just like, he would break it down in a very rudimentary way to the point where you're not like trying to think of things and theorems and this and that. And he was literally for tests, days before tests, he would do like one, like 3 days before the test, 1 day before, $30 a kid. And there would be hundreds of kids in this room. So you're literally just sitting there like, and he had a schedule, like this one was for the physics 211, God knows what exam that's in this week. And then like, dude, this guy was literally printing money. And I don't know like what he did, but he also offered one-on-one tutoring. But dude, like you can start a huge business with that.
Dude, there's plenty of creative ways that you can make money. I know like one of my friends, like his dad, I think bought like a snow blower, you know, so like you used to like every winter time when winter would come, he would just go and, you know, blow snow for people and make some money and use that money for the rest of the year, you know. I still remember this one fucking professor. If I saw, Bio 203, this dude used to, like, you know what his tests were? Which answer? It's like multiple choice, but which one is the most incorrect? And I remember that shit used to piss everyone off because it's like, how the fuck are you supposed to determine which answer is the most incorrect? You know what I mean? It's like, it throws your brain off, man. So it's like, hey, 2 + 2. And then it's like, which one is the most incorrect? 5, 7, or 10? It's like none of them make any sense, but which one is the most incorrect? So his logic was the 10 is the most incorrect. But it's like, that's stupid, you know, and this is for fucking biology. So it's not even like, I don't know, dude. I remember that was like the worst class I had. I got a B+ in it and I was happy with a B+. Like, but the entire fucking class, like, dude, I must have popped Adderalls like two, 3 times. What is that thing called? Like during the midterms and the finals, just to get that B+. So I took a little bit of Adderall during college. I remember one time I took it, I was up for like 13, 14 hours just studying. Like it turns you into like a super, like, you know, like just super focused on the work, especially if you're not, you know, if you don't have ADD, it turns you into like, gives you a lot of studying. I don't know, just that focus.
Yeah, I never really needed it, and so I tried it once or twice, and it gave me a lot of like paranoia and anxiety, and so I just didn't like how it made me feel. So I know a lot of people in college and high school and stuff that would use it for tests, and it just wasn't for me, man.
That's funny. Someone's like, Chris just racking up more evidence on the RICO charges on a Thursday Night Live.
Thursday Night Live.
Yeah. Man. See, the problem is the statute of limitations is over. Can't come after me now for taking Addies back in college 20 years ago. I'm not even using the fucking degree that I got for it. So it doesn't even matter. You know, so many people I know in college, like they went into with X major and they left with an X major, you know, because it, you know, when you're in college, that's like one of the, you go in thinking that you're going to do one thing,
Mhm.
and by the end of it, you realize that, hey, maybe this isn't exactly what I want to do, you know.
Yeah.
But yeah,
I did have a question for you. This person asked specifically, what price would you get in on SLG? Did it dip a lot? I
yeah.
saw it was still in the
Oh, it
40s.
did. It was down to like 37 today.
Really?
37, 38. Yeah.
Gets me
It's down
fired up.
almost 9%. So I've been
9%,
in with an
holy shit,
average
yeah.
in the 22, 23. So I have a lot of like downside room, you know. So just heads up.
Huh. Well,
Yep.
it makes me happy, I guess. I mean, I would like for it to keep kind of staying in the 30s, 40s. I'd like
Did you sell
another.
any calls? Did you sell any calls against it?
Yes, my calls are in the low 40s, unfortunately. So that's kind of why I'm excited. But they're both ending in November. So worst case scenario, I was going to roll them out. But
Well,
this
you don't
was
have to
back.
roll them out anymore. Now
Yeah,
you can now
exactly.
they're
Like,
probably profit. Yeah.
yeah, they might be profit. So, because I think when I wrote them, it was like in the low 30s, and like a
Mhm.
month or two back, it went from the low 30s to the high 30s in like matter of a couple days. I think it was when
Yeah.
they sold 51% of or 49% of whatever that building was.
Yeah,
They,
625 Madison, I
yeah,
think. No,
625
there was
Madison.
another one. There might be another one.
Was
No,
it one day
625
ago?
Madison. No. It was hold on, let me tell you.
I forget.
SLG sells for to that Japanese firm
Right,
percent.
but it
Yeah.
moved very quick with that.
245 Park Avenue. 245.
245.
They sold it for $1 billion. That
Yeah.
stake in that building. Yep.
So now that, which is a good thing, because now not only is there the total value that they have worth $1 billion, but the building itself is worth $2 billion. So it's like pretty
Mhm.
dope. So very, very
Yep.
well. But anyway, that makes me happy, because I think I have one ending in October and one ending in November, and they're both kind of like in the low to mid 40s. And so instead of having to roll them, maybe I'll buy them back for a profit. You never know.
Yeah.
But yeah, I'm trying to think, like, what is my number one prospect that I'm looking at buying right now? And the thing I was looking at, Bros is down 20%
Yeah.
since I started buying it. So it's down to about a $4 billion valuation.
Mhm.
I don't know if it's down enough yet where I'd start actually backing up the truck. But I wouldn't mind dabbling. I guess other stocks that I wouldn't mind grabbing more of is maybe Rocket Lab. Getting that to 2,500 shares would be really cool. But I'm trying to think, is there any other companies for you that you would potentially sell out of, consolidate your positions in, and dive deeper into?
I actually might unload a few of my regional bank positions, just a few of them, and buy more Google, because Google especially right now feels like so undervalued,
Right.
and even in a recessionary scenario, these guys are going to be printing money, so I have no worry about that. And they have so many share buybacks; their EPS numbers are going to just skyrocket. So I say right now is a time where you take money out of your speculation and you put it more into your surefire bets, especially if the surefire bets are coming down so fast. Like Amazon took almost a nasty 4% hit today.
Oh yeah,
You
I was worried. Remember on Monday I was talking to TJ.
Yeah.
I think, or sorry, Tuesday I was talking to TJ. On Monday morning it was like the mid 140s, and I was like, shit, I'm gonna have to roll this call here on Friday. And
Yeah.
now it's below 129 or like 130. It's definitely below 130.
Yeah, it's 129 right now.
So I don't even need to worry about that call. I'll probably just buy it back tomorrow. It's probably worthless.
Yeah.
Maybe I won't even have to buy it back because it'll just expire worthless.
Let it expire. Yep.
Most of the time, even if it's just $1, I generally buy it back because I don't want something
Yeah.
crazy happening on a Friday evening when I don't have control of it anymore. Because for people that are listening, it doesn't expire Friday at 4 p.m. Eastern time. It expires midnight, basically on Friday evening going into Saturday morning. And so if anything happens after close, you can't trade options after hours. So if anything happens between 4 p.m. Eastern time and 8 p.m. Eastern time, you're screwed, right? Like, so if things are borderline, even if you just lose $1 or $2, it's worth it sometimes to just get rid of the risk entirely. And I do that a lot. I used to do that a lot with my Tesla when I was selling puts and calls on Tesla. Well, I would never sell calls. I never sold calls. I wouldn't sell naked on Tesla because that's a fucking death wish. But I would sell puts on Tesla, and no matter what, even if I had 10 cents left over, I'd buy it back because I was just never wanted it to get to a point where anyway. So
did you ever see this? Do you know who Benjamin is on YouTube? You ever heard of that guy, Benjamin? Okay, so I'm gonna just tell you, like I'm gonna play the video, and it's just really funny.
yeah,
We'll watch it together and review it because like what you're talking about is exactly what happened to this one guy. But it worked out in his favor. So let me just show you guys 1 second. It's hilarious, by the way. So let's just react to it.
it all depends on who it is. I'm not.
Okay. Let's see.
This was posted in the options subreddit. It just shows the entire investing community is just Wall Street bets degenerates wearing different faces. Tens of millions of them. Investing, trading, slot machines, it's all the same thing. What happened here? This is actually one of the craziest and luckiest trades I've ever seen. It's a little bit complicated, but I'm gonna try to break it down. So this guy sells 1,000 put credit spreads. He collects a $2,000 credit with $50,000 in collateral. His entire account. He basically makes $2,000 up front, but is risking $50,000 if the stock drops way below this price. If the stock closes above his short put strike, both legs of the spread expire worthless and he keeps $2,000. In after hours trading, the stock briefly drops between his long and short put. The put he sold is just barely in the money and the put he bought as protection is just out of the money. Being that the puts he sold are now in the money, they get exercised by the buyer. To make this simple, he's now forced to buy $23 million worth of SPY shares, and the puts he bought to protect against this scenario expire before he can exercise them to cover these ones. What does that leave you with? A $50,000 account holding $23 million worth of SPY shares. Just to put that in perspective, $23 million worth of borrowed shares in a $50,000 account is 460 to 1 leverage. It literally can't go tits up. If SPY would have dropped 1% in the morning, he would have lost $230,000 from an initial $50,000 investment. Fortunately, SPY opened green. By the time his $23 million worth of shares sold, the position was up over $110,000. Leaving him with a healthy 200% return and absolutely no idea how he got there. Infinite leverage. There are so many great trades on the internet, like I could just sit around all day.
Can you freaking believe that shit?
Yeah, Jesus Christ.
So this is why like options overnight, dude.
It can be pretty wild. Well, I'm sure you heard about the one kid who was selling puts to collect collateral and then taking the money that he was getting and selling more puts, and to the point where he had stacked up like I don't even know how many contracts. It did not work out for him. I think he ended up owing $100,000, but it just goes to show you what some people will do without really the thought of repercussion. And it's happened to me too, right? I lost out on shit ton of money selling naked calls on GameStop.
So ET FaceTime put this up. So this happened today. Yesterday, someone opened up Splunk $127 calls for $22,000 expiring tomorrow. Then Cisco System announced acquiring Splunk for $28 billion. Splunk is up 20%. The contracts were 4 cents yesterday. Now they're $18.30. They exited today with 45,000% fucking return, dude. Can you believe that shit?
I just don't know.
There's definitely some insider trading, dude. It went from $22,000 to $10 million. There has to be.
It's gotta be, man.
Yeah. There's just the best trade ever, or someone is going to jail.
You hear that, but you never hear people actually get like the people going to jail. Like, but then you have the son of the founder for Dutch Bros being called out because he sold like 20 grand worth of, you know what I mean? Like, I just try to understand some of this shit sometimes, and I don't know. Yeah. Maybe people are really this lucky sometimes. I don't know. That's the thing, though. I don't think you sell buy $22,000 worth unless it's unless you already have the money. You know what I mean? Mm-hmm. But I don't see somebody that is like me or you just being like, well, let's just buy 22 grand's worth, right?
I mean, some people will do that, believe it or not, where they'll do like 24-hour or 48-hour expirations, but they'll do is they'll take a gamble, right? And the thing is, what their strategy is, they have like millions of dollars already, but what they do is they gamble on an unusual event happening. So, like, who would have guessed that Amazon would be down 4% the day before, and Friday, right? Like tomorrow, everything's going to expire. What is that? Amazon is down what? How many percent? Like over the last 5 days, it's down 10% in 5 days. Okay, that was not on anyone's options book. Like, think about it this way. Like, imagine how cheap those puts probably were for anyone on Monday. Now, instead of opening, all these things every day, every week, they go into it and they just buy, $1,000 worth of Amazon puts that are just, absolutely dirt cheap, maybe like 2 cents, 3 cents. And the one time where Amazon does take a fucking hit, boom, your entire, like, your portfolio is set for the next 2 years.
Yeah.
You know what I mean? So things like that can happen where there's like such little risk, but the amount of money, but there could be huge upside on the other side. So
yeah,
I don't know.
Yeah, it makes you think. I mean, because you think about it, it's like, imagine. I always try to think about it because I'm still not the best at, say, trading options, but it's like you get to a point where you're so far out of the standard deviation that you could buy things for a penny, but if anything moves, like let's just say 5%, it's going to go up several 100%. And so exactly what you're saying, it's like, where do you kind of draw the line? But then if you're just looking at normal movements, it's probably not going to be worth anything. So it's like you're kind of playing this line of there has to be some exorbitant amount of movement for it to really cash out and actually overcome. Because when you're buying that far out of the money, you have to, by the time that the price actually gets to that point, you're also fighting against the fact that theta decay and just IV crush alone is going to be huge once you get to the day of. So I don't know.
Yeah.
I don't know, but I've seen things where it's, things have opened down 20% and the put volume and the put value, skyrockets by 40 some percent too, 40,000% too. So I've seen that. So I get it. I can understand where, it's kind of coming from. I don't know. I wonder if is there any contracts going on right now? Like somebody's trying to buy somebody, like maybe Splunk, the deal not going through is something that you could bet on, right? You buy puts and it's like, oh, well, people think it's probably a done deal. You could buy something for probably cheap and just, do a calculated bet, say,
like the Blizzard Activision deal, right? A lot of people thought that was 100% guaranteed, and then the federal, the government could come in and say, "Hey, no, you're not allowed to do it," and boom, the price drops back way below that. I mean, there are opportunities where you can arbitrage, things, but then there's also opportunities where you can take some inordinate amount of like sizable gain, but very little risk. But but the chance of it happening is so light. I don't know, man. People can figure out ways to make money in the market. A lot of people have different strategies. For me, the best strategy that I have found, find companies that are fundamentally strong, buy them and hold them. And when they get to a price where they're not fundamentally, sound, sell them. And that's it. Like, that's my strategy. It's not super complicated beyond that.
Right.
So, yeah.
Right. Well, all right, man.
All right.
I'm going to watch the end of this Thursday night football game, but I'll
all right.
chat with
Enjoy.
you.
Yep.
Amen.
Later, dude. Take care.
Take care, everybody.